Thanks, David. I appreciate you inviting me into this little training. And my name is Gary Dean. I'm with TimingResearch.com. And really, what I want to go over is just it's really I'm going to go over the charts, but I want to go over a trading strategy that we've been using. We have a live trade room that basically the member, whoever's inside it, are seeing my trades exactly as I put them. I post them in there before I actually make it. But we what instead it's if nobody is familiar with options, that's what these basically are all about. And I'm going to give you an idea of what it is. So here, this is we really trade the S&P 500, and the way that we do this, it's I don't know if anybody's familiar with the iron condor, but basically what the trade is that you're selling premium here, and what you're doing is you're selling the 5870 call. So being that's closer to this, that's let's say that's for you're selling that for $2, and then you're going and you are buying the 58.80. So this is your risk right here. But the thing is that this $2, this is going to cost us $1. So net credit is going to be $1. I'm just putting these numbers out for educational purposes. I don't have them, but in any case, so from there, once you set up this type of trade up here, you then come in and you sell the 5800 puts, and then you buy the 5790. So it's the same concept. You're going to be selling these for $2, buying these for $1. So the way that you make money with this is as long as it stays within these brackets, and we do 0 days to expire. So once the bell rings, we wake up in the morning and we're just looking at the proper setup. I have some other software that I use. Excuse me, I'm just getting over a cold. But there's other software that I use that's a breath indicator. I'll show you what it is, but we're able to match these up. And really the biggest thing is once you're in these trades, there's a way to do it that I teach, everybody in the room, where you're putting your stop in place that you have zero risk on this trade, unless the trade goes up here and then down here, which is very, very, it's never happened once, but it's the way that you put your stops in place here, that if this gets stopped out, this one's going to make the money. If this one gets stopped out, this one's going to make the money, and it's a break even. Now, if they fall within these brackets here, then you collect the full premium, the $2. So if you bought 10 contracts, it's a $2,000 trade on it. That's what you would make. And again, if it goes up, then you're going to get stopped out at this part of it, but your put part is going to make the money. So it's one of the really unusual, say, risk-free trades that are out there. And really the risk is if it came out, took out this stop here, and then came out and took this stop here. But as I said, you're talking the S&P moving up 80 points intraday and then dropping 80 points. So it's something that I haven't seen it happen yet. But what we do, the way that I kind of base these is we want to see what the trend is in. So the main trend that I follow is the hourly chart. So you can see right now it's on a buy signal. So what I would do is on any dips, well, when it stayed on the buy, but any dips, you sell your put position first. So you're collecting your premium on that. And once it gets up, now you turn around and you sell your call thing. But that's really if we're getting big moves. If we like when we had, I'm going to give you a good example. When we had this big move up, actually it was right here. So we had this gap up, and we were able to put the condor trade in at the same time, and that's where we put our stops in. But this ended up closing right. It was an easy trade for us. We were able to make the total premium. But what you want to do is you want to see what the charts are doing. Do we have any kind of divergence now? I'm not sure if you guys know divergences. Actually, I'm going to do this. I'm going to go to my 15-minute chart because this will give you a better idea. So divergences are when momentum here is not following the, so I mean, that's really not even a perfect one here. Let's say, this might be one right here. I'm just trying to look this on the float. So here you can see we made a low and then we made a lower low as we had the momentum heading up. So this right here is a buy candle. You can see it went down and closed up near the highs. So this was an easy one. You want to look for the main thing with these types of trades is looking for the buy and sell signals. So these are your sell signals when we go up and then and close down at the lows. And from there, obviously, you see what happens. But I really the big thing that I do is I'm a bit very big with Fibonacci retracement levels. And then here, I'll show you the software that I use. So this is a market breadth software. And it's not mine. I'm friends with the person that developed it, and it's really it's very, very interesting the way it works because the signal weight is the market breadth, and when this is at a minus, this is a minus, say 1100. And then you have cycle momentum. This could go up to, I think, 100. This can go up to 5,000. So the thing is that I'm going to know what type of day it is before I even start looking at my charts. And because if we have a high signal weight here, that's a negative. We want to be kind of looking to short rallies, but today was one of the different ones because it actually it kept ignoring the signal. So today was one of our harder days to trade, and we still made a little bit of money. I think we made like $900. But the thing is that this one was not really part of that whole thing. But when we had the slope change and we had the signal weight going down. And this one, every bounce there was, you just short it. We made a real lot of money on that. But the blue lines, what we also want to identify are the ranges. So you have this range coming from the 58.45. You have this range coming down to the 58.02. So typically what's going to happen is the indexes are going to trade within a range 75% of the time, and then we're going to get a breakout 25% of the time. So as long as you know where the ranges are and you have your pivots in place, you can simply, when we're up here, you can take a short position and anticipation that we're going to be coming back down here. Or if it takes it out, you put your stop right here, and then you're going to look for the larger range right here. That's up at the 58.62 and then down at the 57.84. Now the reason why this is a range, I know these broke over it here, but you can see it was used as resistance. So this is the range that I have, and it's the same really with this right here. It extends out, but these are the two ranges that you follow, and then if it breaks out of those, then you're just looking at a bigger range. So the way that I really trade these, and you could do them on all different time frames. So you can look at a smaller range and then say, once it takes out the lows of that range, you can get short. And then once you come to the bottom of the larger range, you cover your short position. So right now, I'm not really seeing any major sell signals in place. I mean, we do have a little one here, but it's nothing that I would really make a big trade with. And I told the people in the room that today's one of the more difficult days, and we got this dip here. We're able to get out of our position. I think some people made some money on it. I made a tiny bit, and I moved away just because I knew the market was acting a little strange today. But you can see here, if we have this little divergence here. Let me see if I can pull this. Okay, so here you can see it's very minor. That's the thing. So you have this little divergence right here, but it's not. We're on a buy signal with the Arun. We're on a buy signal with our trend software. So I wouldn't really be looking to go short right now. I'd probably just let it prove and take out these lows beforehand. But as I said, the big part is is looking at the what the breadth is showing us and what to look for the day. Then you go and you can even go down to a shorter term chart. So this was the range that I had drawn today, and you can see it's been trying to poke over it, but here's the bottom of the range. So again, if we break above this, then the next range is going to be duplicate. It's going to be up to here. So this is the next top right here. So if it breaks above this and stays above it, then we're looking at a move coming somewhere up into the 58.62. So the main thing that I look for on these is you can see that this is just a 5-minute chart. So the 5-minute has been on a buy signal all day after this gap down. If we look at the 15-minute chart, it's pretty much the same thing. And if we look at the hourly chart, that's kind of been on it. Besides this little thing here, this has been on a buy signal since these levels here. So as long as they're above, you want to be, looking to buy dips. And if they're, if we're in a sell signal, you look to sell rallies, especially when the breadth software is giving us a pretty good idea that which way we should be going. But so our main type of trading tool is the condor trade, and then placing our stops in place where if one side gets stopped out, the other one's going to make the same amount, and we break even. And really, what we're looking for is it to stay within this bracket right here. So this is the condor trade. Now, when we're getting these big days like this, and especially on this one, we actually just sold the call premium. So we just sold, let's just say 58.70, 58.80 for net credit of $1. And we never took the put side of it because it just was going down too fast. But that there was zero stress at all because we were selling all the way, I think, to 58.90. So this would have had to keep going up to take out our stops. And I didn't really see it happening, especially since we were trading within the range. So I knew we were at the top. And then from there, we just had a massive move straight down on it. Today, obviously a little bit choppy. That's one of the things I wasn't really too crazy about. But here you can see, if we close down, this is going to be say a reversal candle or a sell candle. And especially if it goes red on that, then we're going to say, okay, you know what? We're probably going to come down and retrace the 58.26. If it breaks through that, then we're coming to the bottom of the range at the 5,800. So again, the important thing is identifying where your ranges are first. What do you want to do with it? Then from there, are we on I like to make the swing trades off of the 60-minute charts. This is probably a really good example of it's a little bit of a divergence here, but here you can see as we gapped up. So it's not an ideal a divergence, but it's a little bit. We didn't make another high on it. And we knew that we were in this, this gap up. And another thing that I look for is this was a gap up to new highs, and something that I've been teaching for a while is when you have a gap up to new all-time highs, you pretty much could fade that move that day or that candle and do very, very well, because not many of them will stay above those levels on it, especially when they gap up to new all-time highs. So this was an easy day on us, but another thing I look for is fractal patterns. Like what happens, you can see it's more of an eye thing. It's tough to say, but the 15, because this is where we could probably see some divergences that are good, but it's crazy. There's not that many of them here. All right. So yeah, there's not a whole lot here. You can see, okay, so you see where this had the high right here, and this kept going up, and then we had the momentum heading down. So we knew this is a divergence. So you can see the sell candles right here, and from there we had it. This is what you would be looking for to swing trade, and we came down, found support, and we covered our short positions, and then we got short again on this gap up here and did very well. But the main thing, like I said, is looking at the ranges. Do we have clear buy or sell signals? And if they are, what is the the market breadth telling us, and that's from the software that I follow. And from there, like I said, each day is a brand new day. I don't have to worry about waking up in the morning and wondering what what the markets are doing. When we get when we have the swing trade, I'll hold on to them, but I'll have a stop in place on it. But once we have swing trades in place, then especially when the breadth software is giving us the sell signal or buy signal, it's very easy to just look for your support levels on it. So on here, let me just show you how one of the things that I'll do in looking for pivots, which I'm pretty sure most of you may know or not, but we're just looking at what the fib retracement levels are. So on the upside, I'm just going to move this here. I'm going to actually take it off. So on the upside, you can see every time we've come up and tested the 78% retracement where we've been finding sellers. This is an important pivot for the bears to defend and the bulls to get over, because if they do, that's going to give us our first clue that we're heading up to the top of up the top of the range at the 58.62. So above here, you can say that we're heading up to the 58.62. And I don't think there would really be there's not going to be that much of a sell signal, because they normally are a little more defined than what we're seeing right now. And this is what happens when you trade in these large ranges, is you're not really getting buy or sell signals. You're just kind of looking for where support resistance is, measuring the fib lines. So this would be on the upside. So now what I would do is take the same fib line, and then I want to find out what's support. So you sit there and you say, okay, so we know that the resistance is up at right at let me go back on it, the 58.48. If they get above it, you assume they're going up to the 58.62. On the downside, you can see where I like to match up support with the moving averages, but being this is a 5-minute chart, I don't really pay that much attention to it. But anyway, if we get a dip, you can see the important line is going to be really the 38% retracement, because we have the moving average here. We have 58.29 is a 38% retracement. And then from there, you can see we have support at this 58.24. Below that, we're probably coming down and testing the 78, or just coming back down to the bottom of the range here. So you can do these both ways, is you just have different time frames that you follow. And actually, this is a perfect example of a sell signal on the candle right here, where it spikes up and comes back down. So really what you want to do is place your stop above here and look short. And right now, if the bears can push it through to 58.42, I think we're probably coming down into these levels here. But right now, today's a very up and down day, so it's hard to really predict anything. I went cash earlier just because, like I said, it was just too big of a whipsaw, and there really was no clear, buy or sell signals. Now, on a 5-minute chart, we can kind of see them a little bit. I'm not able to do that. You can see these right here where it's coming down as price is coming up. We have the momentum that's moving down. RSI is getting into the overbought levels. So it would make sense right now. Maybe the bulls try to go up and make it up to the 58.62. I think it's a little dangerous. I just think we're going to be in a chop zone heading into the elections, and I don't think anybody's going to make any big bets until it's all over. And then, from there, either buy or sell. We have to wait and see on it. But this is what I use for support and resistance on the short-term basis. And then I match up this for the resistance part on the upside. And again, looking for divergences, which you can see we have one here with the stochastics momentum indicator, where this is making a lower high as this is making a higher high. So that's a little bit of a red flag. I'd like to see them on the price oscillator, and it's really just kind of a little bit right there. So that I do this basically on all charts. I don't just, if I'm trading stocks, it's the first thing I'm looking for. All right, am I seeing divergences? Where are we on the wave structure? Where are we with the fib retracements? And then, drawing your ranges in place and doing it. So I do the same routine for everything, no matter which, if it's a stock or a commodity or an index. This is pretty much the way I do this. So, that's right now as far as what we do. It's, this is about it. I don't think I'm going to be able to take up the whole 55 minutes on it, but as we go into this, before I take the questions and I can pull up charts for you guys, what we want to do, if you guys are interested in checking out the trade room that we're in, you can send me an email. It's Gary@sentimenttiming.com. And then I'll send you an email back and let you know what it's like to join and stuff like that. And you can see firsthand what these trades do. And I do a training class on setting all these stops and how to figure out which way to look first. Is it going to be the call side or the put side? Are we putting them both on together? Because I worked at an options desk long many years ago, but I learned a lot of these strategies from there, and I've never really implemented them until say the last couple of years. I really started doing it, so it's been working out really well with it. And like I said, I like not having to worry about what the market's going to do in the morning or overnight when I'm sleeping. So I kind of like the whole thought process of being out for the day. We know whether we made money or lost money, not lost, made money or broke even, because again, we're either they're going to close within this area here, or they're going to go above it, and then we're just going to break even on it. So this is and then they only have today. Now if you went out and said, all right, I'm gonna sell next week's these the condor, I don't like it because you can get, and I don't, it's too much risk of getting stopped out in both ways, meaning that you can have a big move up and then where we're heading up and a big move down, but the odds of that happening in the same day, it's real unless there's news. So news wise, if there's a Fed day or a GDP or something that's going to move the markets, we don't set anything up until we'll really just look for a directional trade on that and just either sell the premiums on the call or the put side. But that's what I'm always selling premium. I'm not a big fan in buying the calls and the puts, because they lose most of the time, and that's why I'd rather be selling it to them and saying, here, you can make your bet if it's going to go above or below it, but I'm going to say that it's not. And then, like I said, when the bell sounds, you're done. But if you extend it out, you're going to get a higher premium. So if I went a week out, this would probably be $3. This would be $3, and it would be $6 per contract, as long as it stays within here. But if it goes up and takes the stop out the way that we have it set up, you're exposed down here. And if the next day something else, the market doesn't like something and comes out, now you lost on both ways. So that's why, like, the strategy that I have, I'm a big really just doing it for 0 day options. If I'm going to do something for the next day, I would do it where I'm making it so out of the money that even if they gapped up, it's not going to be there. You're not going to make a whole lot. You're only going to make maybe 30 cents, 40 cents per contract, but you're going to make the same amount right here on the downside. And really what that does, with the fund that I run, you can take 50 contracts, and it's really, you're basically getting paid $2,000 for not having zero stress. I've never had it where I've left one open, because, as I said, you have to spread these out pretty high. When it's the same day, you want to kind of keep them a little bit closer, just so you can, you're not going to get stopped out and it's going to fall within this period here. So, does anybody want me to pull up or have any questions that you want me to answer? And one real quick, how do I actually see the questions? I'm not really too sure on this. That's not what I wanted. David, do you know how to, oh,
Um,
it's in the chat, right?
yeah, it's Alt H, or if you find the Zoom menu.
Yep. I think, is it this right here? This is, I'm just trying to,
It the chat
oh,
won't
the chat's
transmit,
not
so
it?
I can't see what you're seeing.
Okay, wait, so what did you say to go to?
The Zoom menu and hit the chat button.
The Zoom.
Yeah, somewhere on. Do you have multiple screens attached?
Yeah, I do.
Okay, so somewhere either at the top or the bottom of one of the screens is going to be a Zoom menu. It'll pop up when you move your cursor over it.
Uh, this is all I see right here. Is it, can you, I don't, I see your screen.
You,
I'm not seeing.
if you move your cursor to either the center of the top or the bottom of either screen, a Zoom menu will pop up somewhere.
Okay, I mean, see where it is. Sorry about this. I haven't really done these too many. Do you want to just read them to me? And then I can pull it up. I'm not really too sure where to find this right now.
Okay, one is Med, MED.
All right.
And then also there's a question, are you selling options covered, owning the underline, or naked?
Well, they're not covered calls because basically I'm just gonna go to my other screen on it where I was saying, so let me just go back to here. I'm gonna put this on a different screen, but I'm gonna go back to the SPX on it where I have I'm showing this. Hang on, come on. So really, I don't, they're not covered because I don't have to cover them because right now I'm selling the say 5870, but buying the 58 80s. So it's one of the things where my risk is just here. But the way that we have the stop set is it's going to be a zero risk because once if this gets stopped out, what we do is we just automatically put a sell for a nickel because hey, I don't want to leave something open for a nickel. But the way these condors are set up is typically the way a lot of people do them is that they'll only go 5 points. So let's say you sold it, this was at uh 58.75. That's where I bought. So if I just took this and moved it down, so basically you're gonna get less of a premium on it just because the way it works is, let's say you sold them for $1, you have a $5 difference, so the most you can lose on this is $4. So it's not like you can sit there and go, it can shoot up and you can lose your entire account. But I do the 10-point spreads because, as I said, we do the way that we put our stops in place. If they come up and take this out, then we're going to make that same amount on the downside. So to answer your question, they're not covered. They're naked, but I'm selling the premiums. I'm not buying them. I'm not buying naked puts or calls.
Oh, okay. And unfortunately, that's the end of your time now, so I got to cut you off. But all right, so thank you for being here.